Welcome to TradeLog AI Academy. In this module, we're building tradable systems. This lesson is Breakout and Retest, specifically the criteria that make a retest valid and the mistakes that invalidate the setup. A breakout is not a trade by default. It's a signal that price may be shifting beyond a key level. The retest is where the market proves that the level has actually flipped and can hold from the other side. Our goal is simple. Filter impulsive fakeouts and execute only when the setup is confirmed. Range, breakout, then retest. Rule 1 is conviction. The breakout candle must close beyond the level with the body, not just a wick. Then we want displacement, a move that is fast and energetic, with candles expanding versus what came before. Finally, follow-through, often visible through higher participation and volatility, confirms the market isn't just probing, it's committing. This slide is the clean separator. A valid breakout closes convincingly above resistance, showing acceptance and strength. A fakeout often wicks above the level, but closes back under it, meaning rejection, not acceptance. If you can't get a real close, you don't have a breakout you can trust. A valid retest is not chaos. It's controlled. Price returns to the broken level without an aggressive reversal impulse. Then it must hold. Price should not get accepted back inside the prior range for a sustained period. And the retest must end with rejection. Wicks at the level or a strong momentum candle pushing away. Proof that the level is defended. This is the core concept. Role reversal. Old resistance becomes new support after a bullish break, and old support becomes new resistance after a bearish break. If the old ceiling cannot act like a new floor, the entire breakout thesis is weak, because the market failed to flip the level. A failed retest is defined by acceptance back inside the prior range. If price re-enters the old range and starts closing weakly with no bounce, that breakout is being invalidated in real time. This is where bull traps and bear traps form, so your job is to recognize failure early and stop treating it like a continuation. Context decides what the setup means. In a trending market, breakout and retest is commonly a continuation. Price pauses, then continues in the established direction. In a range-bound market, breakout and retest can mark the start of a new trend, because one side finally gains control. So always read the broader structure before you assign the setup's intent. Use the higher time frame, daily or 4-hour, to locate levels that are historically respected. Those levels carry weight. Then use the lower time frame, 15-minute and 5-minute, to watch the retest form and to find a precise entry trigger. This is how professionals avoid random entries. HTF gives the thesis, LTF gives the execution. After a retest, you still don't just enter. You wait for a trigger. Trigger 1, an LTF structure shift. Price breaks the pullback structure and signals the next leg is starting. Trigger 2, a momentum candle at the level, like a strong engulfing candle, showing order flow has flipped. Trigger 3, a reclaim. Price wicks through the level during the retest, but then closes firmly back above it with conviction. Your stop is the line in the sand that proves your idea is wrong. Option 1 is tighter. Place the stop just beyond the retest wick's extreme. Great for precision, but easier to get clipped. Option 2 is more forgiving. Place the stop beyond the entire zone. More breathing room, slightly larger risk. If the stop is hit, the message is clear. The level failed to hold, and the breakout thesis is invalid. Mistake 1. Entering before the close. This is how you chase wicks and buy traps. Fix. Wait for the candle to close beyond the level. Mistake 2. Chasing the initial breakout impulse. Fix. Let price come back for the controlled pullback and retest. Mistake 3. Placing blind limit orders on the level. Fix. Demand reaction and confirmation, then enter. Rule 1. Identify a significant level, clear, tested, and visible on a higher time frame. Rule 2. Validate the breakout. Strong close beyond the level with energy. No wick-only breaks. Rule 3. Observe a controlled retest. Corrective pullback, not an aggressive reversal. Rule 4. Confirm role reversal. Price respects old resistance as new support, or old support as new resistance. Rule 5. Wait for an entry trigger. Structure shift, momentum candle, or reclaim on a lower time frame. Rule 6. Define invalidation. Know exactly where the idea breaks and place the stop logically behind structure. Rule 7. Manage the trade. Set a clear target based on structure, and if price gets accepted back into the old range, respect the failure and exit. Breakouts are earned by the retest. No retest, no trade. This rule protects you from chasing volatility and turns breakouts into a repeatable system. Log every breakout retest attempt in TradeLog AI so you can track which criteria you followed and how that impacts performance.